Yo, yo, yo. Welcome back to the channel. I wanted to make this video as an update to my video yesterday. If you haven't watched that video yet, it's definitely been my most successful video so far, where I basically break down where I think we are in relation to my Wyckoff analysis, as well as a little bit of cycle theory and what we're talking about. Before I start talking about where we are now, in relation to that video, I want to address a few things. So one of the things that I noticed today in today's price action, and we can zoom in and take a look at it, is a lot of people were mentioning me on Twitter or whatever, and they were like, oh, so you're saying that we're gonna see $36 or $38 or whatever the case may be. And I was basing it off of this Fibonacci retracement range that you can draw here by drawing from the bottom to the top of this move. As of right now, I'm not going to give you my take on whether or not that's going to happen. We can talk about that a little bit more in the video. But when I'm talking about these levels, I'm not saying and I'm almost positive I said that we could see, right? We could see these prices, and the reason that I'm saying that we could see us go down to $36 is because historically, and not even historically for AMC, but just overall, the most common levels of retracement are the 0.618 and the 0.786. Based on my experience, you can look back at the freaking SPX from 1940 or 1950 or something and find that these levels tend to be supported if you want to. And so I'm just saying that we could go to these levels, right? I'm not saying that we will or that it's necessary or whatever. I'm not trying to predict the future. What I'm trying to do is understand the price action and kind of tell you guys what I'm looking for. So that should address that. Understand that Fibonacci works. That's a really important thing, and you can see that it worked today. Right? We had this big drop off in post market yesterday, down here to $40.30-ish cents. And then boom, we found support there. That's the 382 Fibonacci. I mean, this is not an accident. Like, either people, which I don't really think is likely, people are actually buying at these levels and creating this zone of support. I think it's more algorithmic. I believe that computers are trading this stuff and they have Fibonacci built into their algorithm somehow, and it automatically will draw Fibonacci's from pretty much every level. So if you were to drag it up here, you would find more Fibonacci levels. See how you have this sort of middle support here, and even you could say that the 0.5 was a version of support here. If you drew it from here, you would have the 0.5 actually be direct support in this case. And then if you drew the Fibonacci from here, you would find the 0.885. I mean, this is undeniable. Look, I mean, look at this. Look at the resistance. The resistance is a 0.618 on this one, okay? So, again, I highly doubt that most of this pressure that creates this sort of effect with Fibonacci is human-driven. I mean, it has been in the past. I think it's a combination of human-driven, emotion, traders using these levels, robotic traders, algorithms, whatever, using these models. And just a little bit of the science of the Fibonacci sequence and how it naturally works. And then on top of all of that, confirmation bias, which is basically or not confirmation bias, but basically, what's the effect that I'm thinking about? Basically, everybody is looking at those lines, so eventually the lines become true, right? So because if this move was happening, right, we would find support here just because everyone is looking at this trend line now and everyone is saying, okay, this is probably the bottom here. Just you're going to get selling pressure at these gaps, right? Because everybody kind of knows that gaps... Whoa, wrong tool. That was a rotated rectangle, sorry. Everybody talks about it all day, every day in the AMC community, at least, that gaps tend to get filled, right? So a lot of traders are looking at this and going, oh, look, there's this gap up here. We got some nice upward momentum. They're probably buying calls down here in this $39 range or something after they see a little bit of support developing. they buy these calls, and then they say, I'm gonna get out of here at this gap and just see what the market does from here, right? And actually, Jen Collado, Alfred, one of my buddies on YouTube, referred to that in his live stream. I heard him refer to it in that way. So, you know, I mean, it's all psychological and also probably mostly robots. But yeah, I just wanted to address that right quick. So, damn, that almost could have been a video in itself, right? I guess we'll continue. Sorry, I'm a little out of breath. I'm really full. I just ate my post-workout meal and all that stuff. But all right. So let's look at our LPS theory. I haven't looked at this specific pre-drawn chart yet. And let's see where we stand. So let me pull up the accumulation schematic. That's the wrong one. Here we go. All right, so based on this theory that I've kind of been going through here, and let's look at it on the daily. I think the daily is a little bit more relevant. Let's see. So we had our right. So we've moved up here. Maybe we'll go to 4 hour. Might be a little bit clearer in comparison, right? For comparison's sake. So we had our move up here. Oh shit, maybe the hourly was the best one. Which would, if this theory is correct, boom, right? This move down is similar to the move down at the end of phase C on that schematic you're looking at. Boom. You come up here outside. I think this might be just one big move up. And then you're coming back down for your last point of support. And also, we do have some pretty relevant levels from a trend line perspective if you just ignore Wyckoff for a little while. And on the daily, this trend line looks a little bit better. Let's see. Yeah, so if you're looking at the daily, let me make this trend line not so ugly. We have found support here, obviously at this trend line based on wicks, and then I mean obviously we broke through a couple times, but then we continued upward after we battled at this zone for a little while. And again, these are trading zones, right? It's a trend line. It's not like if it breaks below it, especially on a wick like this, it's actually for me historically is more of a signal that you have strength there and you have support there. And a lot of people will analyze charts and they'll just take the wicks off altogether just so that they can confirm things like this, but. And I mean, you could draw it like this as well. Where basically, you know, we fought below and then we found support here if you just want to use the bodies of the candles. And it being resistance here is also further confirmation that it is a trend line that should be watched. But I'm saying all that to say that, I mean, I'm going to be honest with you. You know, my sentiment in the video yesterday was very bullish. And if I'm being honest with you, if we're looking at the schematic in this fashion, this very well could be where we start to see that upward trajectory. And I mean, I've been messing with bars patterns as well on this thing, and it's just crazy. Look, previously, let me remove this right quick and just show you guys right quick what I'm going to talk about. Previously. I had been using these trend lines as somewhat of a channel, right? That AMC is trading in historically, right? You have tops up here, you have bottoms down here, and this trend line obviously has been adjusted a bunch of times, but it still is relevant. That's the beauty of being in a bull trend, is that as long as you're playing with the trend, you'll continue to be able to adjust this line downward, and then once it actually gets confirmed and we start to trade in the middle of this zone. And I'm going to make a video that's specifically about the truth of the trend with AMC. So make sure you subscribe and turn on your post notifications so you don't miss that one. But it's going to be much more in depth. But, oh, wait, I actually want these up. Whoa, my computer's lagging. Okay, I'm good. All right. So I've been messing with bar patterns. And if you're looking at, see, okay, so yesterday I had like a kind of a crazy moment, okay? let me break this down. So based on fib extensions, I've shown this on the channel a bunch of times, but I'll just show it again for those, you know, who are new. using fib extension, if you would have used these levels as basically a predictive model, you could have gotten, using this 3.618 Fibonacci, which by the way is just built into this tool. Like when you open up TradingView link in the description down below. You can sign up for free. It's a great tool to use, but you could have predicted really closely this this extension up to the $71.25 level. Now, does that mean like, oh, it literally predicted it? Like, oh, I knew that this was going to happen? No, but it shows you that these levels will behave as zones of support and resistance. And you can actually see this continue to play out. If you drag this out here, you can see that, boom, this 2.618 was actually the resistance that caused this latest downturn that we had in AMC, right? We also had this zone where we were heavily traded. We got support here. We got rejected here. And then we ultimately got support here. And now we're finding support at the 1.618 again. Oh, I didn't even notice that before, but that is crazy. Anyway. So previously, the way that I was kind of drawing my top sort of numbers, right? Like, where do I think that this run could go? If we're just looking at it based on the history, right? If we use the tool the same way, we grab the bottom of the move before, the top here, and then the bottom down here. Previously, I was using this as kind of a predictive model, and also with consideration for the top, right? The top of this trend line. And I've been doing this for like over a month, like definitely. That probably closer to 2 months, if not longer than 2 months. I don't keep track of exactly what I do on a day-to-day basis all day, every day, but maybe I should. Like if we were to blow up tomorrow, right, and just go, I mean, it's kind of too late, isn't it? What is it, October 20th? If we were to maintain this, we would be past the 3.618. Now, where would we have the 3.618? Oh, I'm so dumb. I could have just done this. If we would have seen a similar move to what we saw already, October 5th would have been the date when we met this trend line and we hit the 3.618. That would have been the case already. Am I saying that anything is guaranteed with AMC? No, as I referred to in the video earlier in the video. But you know, you look at the trend, right? And historically, it's what we've done. And also, I need to actually spend some time and go do it. But I have drawn this extension in a way that it predicted the top of this move as well to $20 in January. So previously, this was the way that I was trying to do that. But something has to change at this point, right? Something has to change, because if we were to get rejected by this upward channel of resistance, at this point, we're already past our historic Fibonacci extension that has rejected us in the two previous runs. And I did do a macro video where I talk about why I believe the next major move is certainly up for AMC. So I'll tag that in the description. That's definitely something I'll remember to do. Hopefully it'll be in the top right of the video too, but maybe I'll forget. But the basis of that is that the Elliott wave is a 5-wave. We're in a 5-wave motive, right? That's my conviction. And it's, in my opinion, if you were to do if you talk to anybody who's done Elliott wave analysis for a long time, they would say, yeah, I mean, this is certainly right. And wave 5 is usually much more representative of wave 1 than it is of wave 3. All right, I said all that. Now it's time to get a little weird. If you look at it from a cycle perspective, and I've never looked at this before, okay? Before yesterday. And I talked to Astro. If you're not familiar with him, that guy Astro on Twitter. I don't know what his YouTube handle is, but just look up Astro AMC on YouTube. If you look at it from the perspective of, once the buy button was turned off in January and all this weird stuff happened, and you just ignore that, just pretend like this didn't happen for a second, right? I know a lot of people are like, just pretend it happened. You can't just pretend it didn't happen, but just bear with me. and you draw a bars pattern from here, right? March, I don't know, March 10th to, you know, past the run in June. So we'll just say July 16th for these purposes. And then you bring that bars pattern here, and then you scale it properly. And I'm going to make a video that specifically is answering to like Astro's theory and what's going on with him and why it seems like he's wrong a lot of times, but he's actually right, but wrong at the same time because of how weird all this stuff is. Oh shit, bro. All right, look. Pretend like I did it perfectly, okay? No, this is the wrong one. Okay, no. Damn it, I didn't do it. All right, you guys are going through it with me now. Sorry. I'm gonna do it from here. Maybe it'll be easier. It's so much harder to do this on a computer than it is on a phone, which is kind of weird. It seems like it would be the opposite, right? But where I'm drawing okay, because of my video yesterday, we would say that we think that we're in this zone, essentially. Holy, you guys are, I'm gonna get flamed in the comments for this one. Wow. You guys are gonna be like, dude, you should have just edited this thing. Just edit the video. It would literally solve all of these problems. But anyway, you can see the similarities, right? You have a peak here, you have a down here, it jumps back up. You have this cavernous bottom here before the run up. Now we're starting to experience this run up. And look at the end here. At the end here, if you try and match it up to where it's the end of November, this level here, and again, I know it's hard to keep up because I'm kind of jumping around, but remember, our fib extension does not support a move to $400 plus. So, and am I saying that it's going to $400 plus with certainty? I mean, that's not, you know, that's not what I'm going to try and do. But what I'm saying is if we're sitting here analyzing it and we're drawing, and I'm sure you can see now pretty clearly that there are great similarities in these moves, and I drew this from here, right? Something has to happen here. And when I say that, I know that's obviously literally true, but when I say that, I'm saying that something has to change about what has happened historically with AMC on these runs. And like I said, I believe that the next run is going to be up. But this, right, if you align the scale of this thing, right, you fix this, you basically adjust the scaling of the move from March to June. You adjust it to match up with our current move. And look, the numbers get bigger, so the price movements are more dramatic. This is log scale, so it's accounting for percentage rather than price difference. I don't even know what would happen if we did it on regular, like linear scale, but something has to change because we have exceeded these Fibonacci levels. And also, by the way, I'm not like a Fibonacci genius, and I should spend some time sitting here trying to figure it out, but there are obviously further extension points because the Fibonacci sequence can go to infinity. And so there are further relevant extension points that you can take a look at that might match up with this. But the main thing that I want you to focus on is 279.64 is the 3.618. We would be, if we did that at this point, as I said earlier in the video, we would be breaking this top channel of resistance. We would no longer be using that as the point for our AMC runs, which again aren't guaranteed or whatever. But I'm just saying, like, it's undeniable that cycle theory has some should be at least considered. In my opinion, I mean, this to me, this similarity right here is just undeniable. And also, just for shits and gigs, I know I don't normally curse in my videos. I drew. This is a bars pattern, man. This is why Astro is right a lot of times, but also wrong. Okay, like this is why like he gets so much criticism for this. But just look at how complicated this shit, what he's trying to accomplish is. Okay, if you drew a bars pattern, this like yeah, if you draw a bars pattern of this phase before the January run, I just did this before the video, man. You grab this as a bars pattern, right? And obviously you grab the run in January and everything with it. And you do the same scaling exercise that I just showed you. Look at this, man. Like I remember Astro at the end of September saying it's happening. It's going to happen at any moment. You know why? I literally talked to him on the phone, and he was like, I don't understand why it hasn't happened. You know why? Because he was looking at this. And guess what, man? Like, how can you sit here? The guy literally spends like probably 30 hours freaking a day on this. Literally 30 hours a day. There aren't 30 hours in a day. You're a shill. That's what somebody's gonna say. Oh, it's so hard to do this on a computer. Just look. Just look at it, okay? Don't comment and say it doesn't even look like it because it doesn't match. Just pretend like look at this, the bottom here, right? Look at the top here, or even if you want to, the top here. Look at the peak here. Look at the bottom here. Look at this run down. This is January. This is from September 1st, 2020, when pretty much no one cared about this stock, especially not nearly to the level that they care now, right? That's this to this. I mean, it is just astounding, and that's why I have so much respect for what he does, and I know that like there are certain people in the community or whatever that are saying, just for curiosity's sake, let's draw our fib extension here and really try to blow our own minds. I guarantee you this top is close. Yeah, so the 1.618 would kind of be the level there, and I guarantee you that I could draw a different one that would actually draw a perfect one there if I used a legitimate bottom. But anyway, look, man. I'll just say that all the people that are doing this sort of work with this thing, what they're trying to accomplish, and Astro specifically, man, like to me, it seems to me that he is literally trying to break down and understand and like figure out what may be the greatest financial crime in the history of finance. Like, so if you think that, and I'm sure you can see the similarities here, right? Like, right? We'll just drag this over here, right? I mean, this is crazy stuff, man. So like, anyway, oh wait, it's so hard to. If you think that like Astro or people like myself who are sitting here analyzing the stock are trying to hurt people, I just don't agree with that. I think that it's just so clear that he is just trying to unravel the most complicated and ridiculous thing that may have ever happened in our life. And I mean, we're gonna find out, right? Like everybody talks about synthetics and what those could be from and everything like that, but it's just like, just, you know, without the synthetics, just looking at this chart and how cyclical it behaves, and it's not normal, right? Like this is not something that like that, I don't know. So anyway, I'm gonna cut the video there. I'm gonna make some other videos, but I hope you gained something from this. I know I was kind of all over the place and everything like that, but hopefully you're starting, you gain some perspective at least on how we're looking at this thing and why it's such a complicated thing to analyze, but at the same time, it's so, to me, it just seems so worth it for us to throw things at the wall with this and try to understand it further and analyze it and figure out what is really going on from a technical perspective. So yeah, if you did any, if you gain anything from it, just make sure you like the video before you leave. If you didn't like the video and you feel like I wasted your time and you didn't gain anything, make sure you dislike before you leave. Drop a comment down below. Let me know your thoughts. Let me know what stuck out to you in this video. I know it's kind of all over the place. And also my Discord link, completely free Discord, my Twitter link down below. You can follow me there. And I have a TradingView link. Again, I'll mention that you can use all the tools that I use here. Nothing that I used in this video is in the premium subscription or anything. You can do it completely for free. If you ever do decide to upgrade though, I do get a kickback, like a commission for that. So, obviously it's not expected, but that'd be cool. And other than that, have a good rest of your day. I'm gonna work on maybe a couple other videos and then we'll, see you guys next time. So yeah, talk to you guys later. You ramble too much. These videos are too long, Dave. They're too long. I got shit to do. I know. I don't know. It's just really interesting to me, So. All right, later.